Hello. Welcome back, friends, to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. I hope you've been having a great holiday week. Thankfully, the market hasn't given us too many surprises. So today we'll poke around, we'll look at the Bitcoin price chart, we'll look at derivatives, see how futures has been behaving, and then we'll move to on-chain. We'll try to get an idea of what the market has been doing the last few days underneath the hood and lay out some expectations, or at least prioritize a few things to watch in the coming days as we end 2021. I'm thinking about doing some kind of year in review wrap up. So if you have any ideas or comments about that, make sure to leave them down below. If you enjoy my content, subscribe to my channel and please give this video a thumbs up. If you turn on the bell icon, you'll find out about all my videos the moment they come out. I'm eternally grateful for all of your support. Here's the weekly chart for Bitcoin, and what do I see but a beautiful bullish engulfing candle. This is the third of these we've gotten so far this year, and the previous two led to nice rallies. What we had been speaking about on this channel was the possibility of Bitcoin going down and testing this open area below the liquidation wick, but it has not done that. It likes to do that after big liquidations, but it seems that this lower area defended itself. If we move down to look at this daily chart, we caught some very key technical support here in the last few days. After threatening to lose both the 50-week and the 200-day moving averages, each of them have been reclaimed with confidence. Price did a nice curl here, and we never came anywhere close to threatening the liquidation low. For now, it appears safe. So the next technical level that I'll be watching is this one here around 53,000. After we break out of this smaller area here around 52. But 53, this one here, that's the big one. That was the top of the market on El Salvador's Bitcoin Day. We had a huge liquidation event, $10,000 candle, and it sent us into a month-long recovery. As we'll look on chain, that value of 53,000 was also the short-term holder cost basis around the time that we hit it here in early December. But as we all know, we got a big liquidation on December 4th that broke that level, sent us all the way down to 42K, and here we are. We're sitting right at 50,000, which is an important level psychologically for traders and for casual investors. 50,000 is a big number in the mind. It's half of 100K. And I think that being able to hold this level here could be a great boon to Bitcoin as we enter the new year. Seeing it at 50,000 to start 2022 would be great for price action. It helps establish a tone to begin the year. So for now, technically, we are seeing some strength. We've held support at the midway point of this price range we've boxed out. We held the 200-day and the 50-week after threatening below them for a couple of days and really getting people nervous. And now we're looking to test here, 52 and 53K. That's what's next. Here is our derivatives dashboard, and the main thing people have been talking about the last few days is the meteoric rise of open interest. Here we're looking at just perpetuals, but in the total futures market is also near all-time highs. Open interest, if you recall, is the total value of all open contracts in futures. We've got USD on the left and BTC on the right in order to negate some of the fluctuation of price. And just as I said here in the last couple of weeks, strong rise in open interest. But the curious thing along with this epic rise in open interest and this rise of participation in futures is that the funding rate is not really rising in response to it. It is staying relatively neutral and pretty muted from where we've seen it in recent months and weeks. So my interpretation of this at this time, seeing this rise of OI, it's clear that there's a lot of activity, a lot of interest, but funding is not responding by increasing strongly. It tells me that there is a healthy amount of shorting going on in this market, that despite the longs that almost always exist, there's enough shorting there to pull the funding rate to have a gravity on it and keep it from rising. It's even staying below this 0.01% sort of clamp level that Binance and some other exchanges use when funding is at a neutral value. It tends to baseline around 0.01. Well, it's even below that. So So I do think that we have some shorts out there stacking up. And in addition to the longs that are already there, it sets us up to see some volatility in this low liquidity environment at the end of the year as we come into Monday morning. As the Asian markets open tomorrow on December 27th and then the West a few hours later, it'll be interesting to watch the tone of price action in the early setting. If we start to see some strength, maybe we get some prints over here on the short liquidations chart. Alternatively, maybe price hesitates out the gate. Maybe it dips back down to 48 or 49 and we see some prints on the long liquidations. There's likely a lot of leverage built up on both sides at this point, indicated by this funding rate kind of hanging out where it is. So that's something I'm watching right now. Very high open interest. Funding is curiously around neutral. So I think there is quite a bit of shorting and hedging going on right now. This is CoinGlass, and it's a site that shows all of the perpetual contracts across the exchanges. And if you look at the amount of volume in the last 24 hours, most of them tilt to the short side. It's not always a huge margin, but most of them do tilt to the short side in their volume settled for the last 24 hours. So that does give a bit of credence to our theory that perhaps there are some shorts out here in this market. And generally, the market as a whole is seeing an increase in open interest. So I'm watching this closely. I think the first couple of days of this week could be an opportunity for derivatives to show their face, and we may see the makeup of some of these contracts depending on how it reacts to the price action. Checking in on our spending and profitability dashboard. In the last video, we talked about this tapering of activity here, a slowing down of both loss and profit realization. You can see both of those trends declining here on the right, declining realized profits over a long period of time and recently declining losses, showing that investor interest at these price levels is waning, is exhausting. And you can also see that in the flatlining of adjusted SOPR. This is the spent output profit ratio of all coins spent on the network each day, minus coins that are less than an hour old, but everything else is included. And this value has been essentially flat. It was underwater for a few days and we're now seeing a profitable print. That's great. Love to see that. It's also manifested up here in the P&L, which is the dollar value of this spending here on the adjusted SOPR chart. Now this pink one in the center are the short-term holders exclusively, just their spending. And after a few days being underwater, basically since the liquidation event, they're finally seeing some profitable spending. Let me zoom in here. So a bullish divergence emerged here on short-term holder spending in the last few days. We saw declining price, sideways and declining, lower highs, alongside higher lows in loss prints for short-term holders. That's a bullish divergence. That's a tapering. And we've now seen short-term holders bouncing up, realizing some profitable spending after finally digging themselves out of this 2 or 3 week long, just brutal period. They're finally seeing some green. And the question is, will they be able to reclaim profitability as a group? As we'll see in a moment, that price level looms above very near. Here's a look at our lifespan metrics, and we'll look at several of them together. We've got coin days destroyed on the left, which is the sum of all coin volume accounting for age that is spent each day. Older coins have a lot of days accrued to them, and their spending destroys those days, as we've discussed at length on this channel. And these values have remained pretty low. Entity adjusted coin days destroyed has started to elevate some here in the last month, but it's still historically very low and nowhere near what I would consider elevated. Quiet activity on chain from older coins. When you look at the average lifespan of spending, this is the average lifespan of each UTXO. If you'd like to understand more about UTXOs, I'll leave a link in the description to an early video on this channel where I explained how they work. And the observation here is declining lifespan. That means younger and younger coin spending. Down here in the entity adjusted version, same thing. Dormancy is on the right, which is similar to spent output lifespan, but weighted by BTC. So it's the average age per unit of BTC spent each day. And this is also declining. So we're seeing younger and younger coins transacting on chain. That's great behavior. That is what helps us to feel like the network and the market as a whole is more resilient to whatever short-term FUD gets thrown at it. When the people who have the majority of coin, which is where all of the old supply lives, as long as they remain dormant, we can feel more confident. Here's a look at our long-term holders. They had engaged in some spending after we broke the all-time highs. And we had talked about on this channel our expectation that they would do that they would start to spend as we broke new highs. They did that precisely as expected. Now this group, due to the way that coins need to mature over time into long-term holder supply, there are always coins maturing along that track. So each day, some amount of them grow into older coins. But what causes this value to go down is spending. And when we're not seeing a decline in long-term holder supply, it means that they aren't spending. And by and large, they are accumulating and maturing coins. Seeing that here is great. That gives me confidence because they have over 13 million coins of the just under 19 million currently in circulation. So for them to see no reason to spend them at this point is a confidence builder. You can also see the tapering of their spending here on the net position change metric, which is a rolling 30-day change of long-term holder supply. It was declining and has now tapered its activity and flattened out. So we mentioned that short-term holders were underwater, and we were waiting to see if they could dig themselves back into profitability. As you can see here on their MVRV, they are under a value of 1, showing that they are currently in aggregate loss as a group. So what is that price level that they need to reach? Here is a chart of several price support lines that we've been using over the last couple videos. We've got the 200-day and the 50-week moving averages, which we looked at on our price chart in TradingView at the beginning of the video. We've also got the 50% retrace of the yearly price action, which itself is an important support tool. All of these values were recently caught as support, along with the long-term holder ideal minimum cost basis. And if you're wondering, what the heck am I talking about? I'll leave a link below to the video before this, where I explained my theory behind the concept of an ideal minimum cost basis for long-term holders. It's essentially a 2.5 times profit level. That line is down here at 44,000, and it was not threatened. We also held, as I mentioned, the 200-day and the 50-week and the yearly retrace. The next level up is this red line, the short-term holder cost basis. The last time this value was tested was here in early December, the day of the liquidation event that sent us down to 42,000. Coming into this day, we had bounced on the short-term holder cost basis in late November, and we were looking for it to provide a bounce again, similar to the support we got in late September. But due to the liquidation cascade, short-term holders failed their cost basis, and they have spent several weeks underwater. We now come up to test this value. Though the last time we met it, it was around 53,500. Now it's down near 52,000. So we've got another convergence, a confluence of on-chain and technical factors, which is the sweet spot we look for to get confidence for our assessments. So in the coming days, the levels that I think will be important to watch, knowing that long-term holders are not spending, knowing that the age of coins moving on-chain is getting younger as we see our lifespan metrics declining, the price level to attack next is this 52,000 level to allow short-term holders, which are the newest investors and the weakest hands, the ones most likely to sell into weakness. The market needs to see them pull themselves back into a state of profitability, which will ease their nerves and lighten up some of the threat of sell pressure. So that 52,000 level is one I'm watching closely in the coming days. I also am keeping a very close eye on futures. As we looked on the CoinGlass chart, it appears that there's quite a bit of shorts out there, evident also in the way this funding rate is behaving, despite the fact that we know there's always some longs out there, especially as part of this near all-time high open interest. So as we come into Monday, the direction of the early price action may open up volatility. It may invite a few positions to get squeezed out. I'm not Nostradamus, so I can't say which direction I think it will go, but the market gravitates towards pain. And if we have a lot of shorts built up, there's a good chance that some of them will get squeezed. So that's what I'm looking at today. As we come into the end of 2021, we are in a lower liquidity environment, so the market is more susceptible to volatility. And that's why it's so important to keep an eye on derivatives when they get to these extreme levels, when they're really driving the market. Will it be to the upside as we squeeze some shorts? I certainly would love that, and I'm sure you would too, but I'll be ready for anything. No matter what happens, my core thesis about Bitcoin has not changed. As long as the holders of the majority security of supply, continue to hold on to it, then I will continue to hold on to my confidence and my general bull narrative for Bitcoin in the medium to long term. To keep up with me and everything going on, make sure you follow me right here on Twitter at TXMC Trades. It's also a great place to find out about podcasts I go on and other content I'm participating in. If you have any ideas for an end-of-year wrap-up, or you have questions or concerns about other areas of the market or our analysis, make sure you leave them in the comments. I don't want to keep you guys any longer, so I'm going to let you go. Take care of yourselves, enjoy the end of your weekend, and we'll speak in a couple of days. Cheers, friends.